Welcome to the Daily Insights That Matter. The National Stock Exchange or NSE has once again emerged as the world's largest derivative exchange in 2022 by the number of contracts traded. Now, as per data based on the statistics maintained by Futures Industry Association or FIA, this is the fourth consecutive year when the exchange earned the top spot. Now, NSE is ranked third in the world equity segment by the number of trades, electronic order book in 2022. Now, the NSE has outperformed global markets in terms of the volume generated in the derivative segment and has earned the top spot for the fourth consecutive year. Now, in the equity segment also, NSE is now at the third place, up from the fourth position last year. NSE's outperformance can be attributed to the significant strengthening in liquidity in categories like equity, equity derivatives, and currency derivatives. Now, in the calendar year 2022, India's benchmark equity index, the Nifty 50, touched lifetime high of 18,887.6 and ended 5% higher, outperforming many of its peers. Now, with the addition of the Nifty Financial Services Index and the increasing liquidity, volume is expected to increase significantly. Government securities also witnessed considerable growth in the equity segment, although on a lower base, with volumes touching a daily average turnover of approximately 3 crore rupees last month. Now, the India-UAE Comprehensive Economic Partnership Agreement entered into force on the 1st of May. India's outbound exports under the Comprehensive Economic Partnership Agreement had surpassed the $5 billion mark in December, with an overall duty concession benefits totaling up to $254 million. Now, a COO issued to an Indian exporter certifies that the goods have met certain criteria considered as originating in India. Now, the COOs, which are mandatory to claim duty concessions under the bilateral free trade agreement, may reflect into actual exports with a lag, but they are strong indicators of the utilization of the pack. Now, during the October to December quarter, 17,005 COs worth $3.33 billion were issued to exporters against $5.45 billion worth of non-oil exports. Now, in the July to September quarter, 12,875 COs worth $1.31 billion were issued against $5.83 billion worth of non-oil exports. Now, the India-UAE Free Trade Agreement was the first significant bilateral trade agreement signed by the current government. Now, the agreement was expected to provide duty benefits and competitive advantage to the Indian exporters. Now, the UAE-India agreement utilization is on an uptrend and is expected to continue further. It demonstrates that the India-UAE agreement is operating as a buffer against weak global demand, and the robust data on issuance of COs just reinforces the same point. So, what does all of this news mean for you? With the debut of the T+1 trading cycle, which came into effect on 27 Jan, and the increasing of liquidity and early access to funds, the volume of equity and derivative segment is expected to grow further going forward. This will therefore have an indirect positive impact on you. Now, it is too early to assess the effect of India's FTA with UAE, but the early numbers are encouraging, and this will therefore have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.